Guys, welcome back. Let's be real for a second. Monday, Tuesday. Honestly, this entire week has been a massive test of patience. I open my terminal, and my first instinct is to just close it immediately. Bitcoin is testing our nerves, altcoins are bleeding out, and portfolio balances are getting thinner. If you've been watching the news, you saw the headlines. Over $700 million flowed out of Binance in just 24 hours. Miners are unplugging their rigs because electricity costs are higher than the rewards. The altcoin season index? It's hit rock bottom sitting at 30. Is it scary? Yeah, it's ugly. But while the crowd is panicking and selling at a loss, something anomalous is happening in the market. I've found a few assets that are behaving as if this Bitcoin crash doesn't even exist. They aren't just chopping sideways, they are pumping. They are hitting local highs. Today, this isn't just a news update. This is an investigation. We are going to break down the list of the survivors. I'm going to show you the specific coins where smart money is parking its capital right now, this very second. Why is Hyperliquid flying while everything else dumps? Why have dinosaurs like Zcash suddenly woken up? And what is Ripple planning for mid-February 2026? Sit back, grab your coffee, or open up TradingView. We are going hunting for green in a sea of red. Let's dive in. The crash anatomy. Why did we drop? Before I show you the coins that are mooning, we need to pause and understand the context. What actually happened? Why did Bitcoin, which everyone expected to hit 100K, decide to test the lows instead? It was a perfect storm. Three specific factors collided at once. Factor 1, miner capitulation. Look at this. When Bitcoin dipped towards 70-0, older ASIC models stopped being profitable. The energy cost became higher than the mining reward. So, what do miners do? They unplug the machines, and this is the bad part, they sell their Bitcoin reserves to cover losses and pay the bills. We saw a massive sell-off from mining pools over the last 3 days. This created constant sell pressure that the bulls just couldn't absorb. Factor 2, the Binance Outflows. The second hit came from nowhere. Binance. Over $700 million withdrawn in a single day. The market is incredibly jittery right now. Any rumor, any large whale movement is interpreted as it's over. The exchange is collapsing. This was a chain reaction of fear. Whales saw the outflows, decided to de-risk, hit the sell button. Classic crowd panic, not based on fundamentals, but it tanked the market. Factor 3, the leverage flush. And third, my favorite, flushing out the tourists. By the start of February, the market was overheated. Too many people piled into longs with 20x, 50x leverage, expecting easy money. Funding rates were sky high. The market makers essentially had to push price down to grab that liquidity. We just got washed out by a cascade of liquidations. Why is this good news? Because the market is cleansed. The weak hands are out. The unprofitable miners are gone. Only the strong hands remain. And it is exactly at this moment, on this scorched earth, that the strongest narratives start to grow. Let's look at them. The Hyperliquid phenomenon. Hype. Okay, number 1 on our list. The absolute star of the week. Hyperliquid and the Hype token. Let's be honest. Usually, when a project has a token unlock, what happens? Price falls off a cliff. Investors take profit. The order book thins out. Panic sets in. Today, February 6th, is a massive unlock for Hyperliquid. About $300 million worth of tokens hit the market. And what do we see? Look at this candle. Instead of a dump, we see absorption. The price isn't just holding, it's trying to push higher. This is anomalous strength. When an asset pumps on bad news, or news that should be bad, that is the strongest bullish signal you can get. Why is this happening? First, the HIP4 update. I won't bore you with code, but Here's the simple version. They added a spot reference for perpetuals. It reduced the risk of scam wick liquidations. Traders love this. Second, Hyperliquid is eating Polymarket's lunch. Prediction markets. People are betting on sports, politics, and events directly on-chain. This brings in fresh liquidity that doesn't care about Bitcoin's price. And finally, rumors. The market is whispering about an integration with Ripple technology. Even if it's just a rumor, in crypto, we buy the rumor. My take on hype, this is the market's high beta play right now. If you believe DEXs will win, this asset looks stronger than the entire sector. It's defying Bitcoin's gravity. Privacy is back. Fear as a driver. Moving on, the second sector that survived and is thriving is privacy. Look at Zcash. Up 16% this week. While Ethereum bleeds and Solana corrects, this dinosaur from 2017 is suddenly waking up. Why? We are in 2026. Regulation is tightening its grip. KYC is required everywhere. Tax authorities are tracking everything on public blockchains. Big capital is starting to look for a safe haven where they aren't being watched. Zcash and Monero are back in play as digital gold for privacy. But there's a new player too. Midnight from the Cardano ecosystem. Token. Night. They just rolled out the Kukulu phase. Here's the difference. Zcash is for total anonymity. Midnight is for business. It's smart contracts that hide commercial secrets but remain auditable for regulators. This is what corporations have been waiting for. Imagine a company wants to do a deal on-chain, but doesn't want competitors to see the price. Midnight solves this. So, if you thought privacy coins were dead, you were wrong. Fear is a great salesman. And right now, fear of regulation is pumping this sector. The giants. We're Whales Park Capital. Now, let's talk about the heavyweights. Where do you go if you don't want to gamble on new coins, but you're scared to hold cash? Two heroes here, BNB and XRP. First, BNB. Guys, this thing is a tank. Look at the BNB, BTC chart. It's grinding up. We've got the Coinbase listing news, which is basically a stamp of approval from US regulators. Institutional investors see this and are treating BNB like an index fund for the whole industry. It's holding value incredibly well. And now, the fan favorite XRP. February 11th is XRP Community Day. Usually, we see a run-up before events like this. But it's not just the party. Ripple is rolling out the XRPL v3.10 update. Sounds boring? It includes a native lending protocol. This means banks Ripple's partner scan now officially lend and earn yield directly on the blockchain without using sketchy third-party smart contract. We already know Evernorth is planning to use it. XRP is transforming from just a bridge currency into DeFi for banks. On a falling market, fundamental news like this acts like a concrete floor under the price. And a quick mention for Stacks. STX. If you believe Bitcoin goes back to 100K, AI models are predicting a bounce to 78K this month, Stacks is your leverage. It's a Bitcoin layer 2. When BTC bounces, STX usually moves 2 or 3x harder. Conclusion, your battle plan. So let's wrap this up. The market is red? Yes. Is it over? Absolutely not. We are seeing a clear divergence. If you are an aggressive trader, look at Hyperliquid, Hype. That's where the volume and the narrative are. If you want to hedge against regulation, add Zcash or Midnight to your watch list. If you want to preserve capital, BNB and XRP are performing better than just sitting in stablecoins. The days of buy any dog coin and get rich are paused. We are in a stock picker's market now. You have to be selective. The survivors are the ones with real utility. Don't let the panic shake you out. Red candles are opportunities if you know where to look. Question for you guys. What are you buying on this dip? Do you believe in the hype narrative, or are you sticking with the classics like XRP? Drop a comment below if you type Survivor. I'll know you watched until the end. Smash that like button if this deep dive helped calm your nerves. It helps the algorithm, and it helps me. Stay safe, don't catch falling knives, and I'll see you in the next video.